Is the Nasdaq setting up for a crash, or will the AI bubble be the cause of it? The Nasdaq has been running up tremendously over the last 6 months. Went from at its low, it was like 11,000, hovering a little bit over 11,000. Now it's over
Yep.
14. Now it's over 14,000. So, that's a pretty big jump in a 6 month time frame.
Yeah.
So a lot of that has been the cause of this AI frenzy that we're in. Everybody talks about Chat GPT all the time, and everybody's coming out with a competitor to Chat GPT. We'll talk about that today as well. Apple and Google and Meta and all of these
Microsoft. Yeah.
things. So Microsoft and they invested in Chat GPT as well,
Mm-hmm.
OpenAI. But what comes up must come down. So yeah, what's the deal?
A lot of people were asking me this question over the weekend, and 16,000 is usually a great support area for, resistance area for NASDAQ. I don't think we'll have a crash. I think what people are worried about is that the market has went up so fast. Is it going to pull back? My number one piece of advice for everyone long term is through every occasion, every season, every storm, every news headline, please look to hold for 5 or 10 years. Will we have a pullback at some point? If it's not 16,000, maybe 17,000, we'll have a little bit of a pullback. For my traders, I would definitely map out your technicals. I will look to see if we break past 16,000 and what news comes out as a result. So like Tesla reported, we'll talk about that. If more companies report better earnings, we'll push past that 16,000, 17,000 level with no problem. But if we aren't seeing strong earnings over the next couple of weeks, it'll give you a sign that we'll begin to slow down. So for my long-term investors, don't worry about it, because everyone who's always talking about a crash, they are betting on the wrong side of history and the market. But for my short-term investors or swing traders, I would map out my levels and have some protection in place. And now is definitely not the time to buy the NASDAQ. Like if you haven't got in already, it's too late. You're going to have to wait for a little bit of a pullback.
Yeah, I mean, if we look where it was maybe a year and a half ago, we're talking down 30%. And so, I mean, just from a standpoint of looking at the technicals, the chances of it pulling back another 20 is tough. But you have to look at what, like you said, what is leading it. Is it the Magnificent Seven leading, or is it the entire space? And that's a tough call, right? Because if we're looking at it, yeah, the Magnificent Seven are leading. Yes, AI is leading it. Is AI slowing down? No. Will there be companies that are going to be created and acquired during this time? Yes. Do those companies cost money? Absolutely. And so that's going to dig into the margins of some of these companies that are looking to acquire. But I don't see the space having another. We wouldn't call it a correction, right? Because that means it would have to go down 20%. But it's going to slow down, right? It has to slow down, and that's good. That's a good thing, right? Well, what we saw on Thursday and Friday, I was getting text messages and DMs like, "Oh my God, is it happening again?" And I'm like, "Do you realize that you've gone up over like 12% in a month? Like, do you realize that?" Right? So, like when for an index, not just a company, for the entire index. And so when it pulls back 2% in a day, I want you to be prepared for that. I want you to like really get to see like what that feels like. And so it's important to have these moments. It's a resetting of a sense when it's like, all right, well, let's take a pause. We got a couple indicators that are going to be coming this week. We know that the Fed is going to raise potentially. All signs are pointing to that. We know that a lot of the big companies are going to be reporting this week, Microsoft and Google included. Meta's included in that. And so let's see where we're at before we continue to ascend, or if we go sideways for a little bit. It's been an incredible year for the NASDAQ. And so we got to just take these things in stride, like really assess what's happened, not look at the short term, but look at what has happened over the past 6 months, look over the past 2 years, 3 years, and really assess where we're at right now. We're in a good spot.
And a quick lesson too, please write this down. If the market does not halt, there's really nothing to worry about. Like if things are getting really bad when you hop on CNBC or Bloomberg and they halted trading because the market is falling down so much. So if we fall down, I think 3%, and they like work the circuit breaker to make the market stop or pause for a little bit, that's when we're getting into a territory where we could end up having a correction. but these are just normal waves and pullbacks. And tip number 2, you have to look for amazing asymmetric risk. So where you have the risk to reward ratio in your favor. We're almost at the top of the market. It's just a lot of people at this point taking profit. So I don't see a crash coming. Will we see a pullback of 5 to maybe 10%? Sure. But like Troy said, I mean, we went up 12% in a month. And since last year, the Nasdaq has been on one of the most amazing runs in the last 15 years. I don't think there's anything to worry about right now.
Yeah.
Well, 35% year to date, Nasdaq.
And the Dow's up 11 days in a row.
Yeah, right. A pullback of a 1% or 0.75% or even 2% in a day. Yeah. In your portfolio, if you're looking at your account on a daily basis, it doesn't feel great, but it's part of it, right? It comes with the territory, right? When we were climbing up, 20% over the past 3 months, it was an amazing. This comes with it. So you got to take the ebbs and flows of investing.
Yeah, we always have to look at that long-term horizon and never the short-term. Like we had something happen today that most people, if it would have happened to them, they would have wanted to quit. But over the aggregate of a year, most of the things that bother us won't even matter. So keep your focus on what is happening long-term. And also too, I had told, speaking of Stock Club call, I had put a stat in our chat, and I want to read this off in terms of Vanguard and BlackRock. So combined, Vanguard and BlackRock has 16.69 trillion under management. That is the equivalent of 71% of the United States GDP. Vanguard and BlackRock are both heavily invested into the Nasdaq, and majority of the properties in Nasdaq. If you think they're going to fall while they are in it, we have another thing coming. And the biggest investor in Vanguard is BlackRock and vice versa. They have vested interest in these companies going up for a long period of time. That's why I always say the market is rigged, but it is rigged to stay up for a long period of time. Don't bet against the Fed, Vanguard, or BlackRock.
Don't you do it.
Don't do it. Please don't do it.
Please don't do it.
Well, speaking of AI, and we will be having a AI activation at InvestFest. That's actually something that we added to the InvestFest vendor marketplace because I feel like it's important for people to actually see different things visually. So wanted to kind of give that glimpse into the future. So that is something I'm extremely looking forward to this year for InvestFest because we talk about AI so much that you gotta kind of give people like something that they could really feel and touch. Pause.